that we've been talking to, the founders say that their number one concern over the weekend was making payroll this week.
That the American banking system is really safe and well capitalized. It's resilient.
Americans can have confidence that the banking system is safe. Your deposits will be there when you need them.
Signature Bank, which is based here in New York, also collapsed and is now in the hands of the FDIC.
And Silvergate shares are down 40% right now just because they've announced their intent to wind down operations and voluntarily liquidate Silvergate Bank.
Hey guys, so I don't know how many of you guys need to hear this, but we are in the 11th hour. Biden, Powell, Yellen, they have all tightened the noose around the neck of every single person that's living in America right now, that's a taxpayer in America. So if you need to know how it actually works, why is the bankruptcies of Signature and Silvergate so bad for crypto? Well, that is because they were the two major on-ramps for us to really make it easy to exchange our money, our fiat currency like US dollars, into crypto, into Bitcoin. And now these major banks that a lot of these crypto companies use, like Coinbase and Paxos, now that they've been shut down, everybody's on a scramble in order to find new partners so they can continue serving us who are interested in buying more Bitcoin in the light of bank failures happen. And the only way to protect against that is Bitcoin. Well, there are some other ways, but we are a crypto channel after all. So I really guess what's happening right now is that people are starting to realize that they really cannot trust the banks, even though the Fed came in and intervened and they guaranteed the deposits of all depositors. And you know what? I remember when I was 16 years old and it was my first time getting a job, and what that my mom told me to do, she told me to start a bank account. And I remember back then I started a high interest savings account, and that gave a 2.5% interest rate. Isn't that incredible? Because right now, how much of an interest rate can a bank give you in today's environment? Getting any sort of return from a bank nowadays, it's something to dream about. Fast forward 16 years later, and what we found out is that banks like Silvergate and SIVB, Silicon Valley Bank, are anything but safe. Because what you are as a depositor is that you deposit money with them, you get nothing in return, and they can use your money to gamble with. And if they screw up, the only people that really lose are the depositors. Luckily, this time the Fed intervened and they bailed everybody out. Everybody that is all the depositors and businesses that deposited money with the banks. But we don't know if that's gonna happen every single time. So on Sunday, March 12, 2023, the Fed, the Treasury, and the FDIC all decided that depositors will be made whole via the insurance from the FDIC. And if you don't know what the FDIC, they stand for the Federal Deposit Insurance Corporation. And what they do is they collect fees from banks all across the nation, and those fees are intended for the purposes of making depositors whole in the case of bank failure, like what we've seen happen with SIVB and with Silvergate. Signature Bank was also forced to shut down and to stop serving crypto companies, and these guys are big. They had 10 times the amount of assets than Silvergate, and some of their clients were Coinbase, Paxos, and Galaxy Digital. So now they're kind of left in limbo looking for banking partners to work with now. So at the end of the day, what the decision was is that they decided that all depositors will be made whole and there will be no losses on the part of taxpayers. On the other hand, shareholders and unsecured debt holders, they will all be wiped out. They will all be zero, which is different from what happened in the '08 Great Financial Crisis. In addition, senior management from these banks that failed have also been removed. And on top of that, they created something new called the Bank Term Funding Program, or BTFP. And it was made to avoid these sorts of situations. And what it's going to do is that this program is going to basically offer year-long loans to banks, saving associations, credit unions, and any kind of eligible financial institutions when they need money. And these loans are gonna be covered, they're gonna be collateralized by collateral valued at par. So think treasuries, for example. Now, I'm not an expert, so let me know if I'm wrong in the comments below, but this is how I see it. If a bank a year ago bought like $1,000 worth of treasury bonds, and this is gonna expire in like 5 years, obviously that bond right now is gonna be worth less than when they originally bought it, right? So what the government is gonna do, they're gonna loan these banks money in exchange for that bond as collateral, so they get back their collateral now. And because it's a loan, the banks will have to pay interest. This will give the banks liquidity when they need it, and the Treasury has put aside $25 billion just for this program of when they need it. And I think they do need it because I don't think SIVB is the only bank that pulled this stunt. I think a lot of banks out there have the same sort of balance sheet as SIVB. We just don't know it yet. JP Morgan Chase. So guys, one thing that is really important right now is to get skills like making your own bread. That's a skill that I am working on, have been working on for the last year, because when shit hits the fan, then I know that I can still have bread. But anyways, about this bank term funding program, I think it's actually a great program for everyone except for you, the taxpayer, because what happens is that now the government can get back these treasuries as collateral when banks struggle, when they're about to run out of money. They can actually get loans from the government from this bank term funding program in exchange for collateral, such as treasuries that they bought during the bull cycle, right? So what happens is that the Fed now wins this game because they get back their treasuries, and also the loans that they give out, well, these banks will have to pay interest on them. So who wins in the end? The Fed. But there's one question about how this all works. You know, these loans, $25 billion. Where is the government going to get that from? I think they're going to turn the money printer back on. And what happens when they turn the money printer back on? Well, inflation is going to go crazy again, and the only people that's going to hurt is the average American, the average person that's living in the world that's affected and connected to the Feds, and they're playing with the interest rate, which is basically everybody. So with regards to everything that happened, I have a really apolitical stance. You know, Biden, Jay Powell, and Yellen, they had to do what they had to do, because if they didn't do that, if they didn't bail out the depositors, if they didn't do what they did, then what will happen is that the businesses that had their deposits at SIVB, they wouldn't be able to make payroll. They will have to let people go. And when you let off thousands of jobs across the nation, that's gonna send us back to a place even worse than the last Great Depression in the 1930s. So at the end of the day, the decision is still kicked down the road. The can is kicked down the road. We're still playing musical chairs here, and you have to prepare. You also have to live with one eye open, but I am all hands on deck right now. I am preparing. And if you want to learn how to prepare, if you want to know what I'm doing to prepare, then you can do that easily. It's free. Just smash that like and subscribe button, and maybe send this video to someone you think needs to watch this, because let me ask you this question. Can you really trust a bank in these environment? To me, it's a hard no. So what I think is, at the end of the day, the government wins, the banks win, because they want to keep us in this monetary slavery system called the US dollar. If you want to escape with Bitcoin, you can still do that, but it just became that much harder because Signature and Silvergate is basically gone now, and they were our two biggest bridges to trading our fiat for crypto, for Bitcoin. I really feel that Americans have been played, and the noose around our neck has been tightened by the government. Because if you want to quit the system with BTC, with crypto, two of the bridges to quit that system are now gone. And that's basically all I have for this video. So if you guys did enjoy this video, then please be sure to smash that like and subscribe button. Check out our other videos on cryptocurrencies and passive income. And remember guys, continue working, continue building, continue inspiring. I'll see you next time.